The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 25th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now it's not too early. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on Magnificent and Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow down 102 points. She's trading at 18,468. S&P off 11 points at 2164. NASDAQ Composite off 11 points at 5088. Russell 2000 off 3 points at 1209. The DAX closed up 50 points. The FTSE down 20. Gold's trading back about $2.50 at 1320. Silver is flat, trading at 1968. Light Sweet Crude is off $1.08, trading at $43.11 out here. Movers to the upside, you've got Tesla up $5. Outer Wall Inc. up $5. Nettie's up $4. Silicom up $3.70. Marriott Vacations up $3.50, about 4%. To the downside, you've got Priceline. Not a big, nothing new there. You know, with $1,300 stocks off $21. Roper Technologies down $11. That's about 6.5%. Boston Beer taking a timeout. As I seem to recall on Friday, that was trading to the upside. Looks like it's back $8, about 4%. To the downside. So where do we want to begin? I would believe where you want to begin, where we want to begin, where I want to begin, I guess that's what really matters because I don't have any questions I know of, is what are the markets doing? So let's do this here. Is this the beginning of a retracement slash top? And we're going to walk through this one indice at a time. Let's start with the NASDAQ Composite. Let's start with that. Let's get a view of the overall NASDAQ. And the answer with regard to the NASDAQ Composite, because we want to see, what's the real engine behind this market right now? Is it the S&P? Is it the Dow? Is it the NASDAQ? We do have this week where we've got a lot of NDX stocks that are out, so we'll take a look at the NDX 100 as well. If we take a look at just simply the NASDAQ Composite, the answer is no. This is not the top just yet. It hasn't given you the signal to say, hey, go ahead and go short the market if you're going to base those decisions on the NASDAQ Composite. And I'll tell you why. Stevie's red line. Whoops, didn't mean to do that to the mic there. But Stevie's red line. It's priced right now at 5049.22. You're going to see it move up and down as price moves up and down, a price discovery tool. But it says its price oscillator is still rising. Price oscillator right here, it's down at the bottom of my screen. I've gone ahead and blow that up. The red line is just a way for me to know without even having to put that decoration, that indicator on my charts out there. And I like to kind of, only have I want to have as few items on my chart so that I can clearly see what the market is communicating to me and you. But at this stage here, just simply from an educational standpoint, the red line out here in that price oscillation, which is the difference between two exponential moving averages. That's how Stevie uses it. We look at that zero line. And a rising price oscillator above zero is very bullish. That is what we still have in place now for the NASDAQ Composite. I'm going to switch over from this chart here. If the NASDAQ Composite closed horribly and closed below 5049.28, a whole different message. That is not what we have here just yet. Now, as I switch over and we take a look at the advanced decline oscillator inside the NASDAQ Composite, well, we're going to see close to zero. You'll see the reading is 24.32. What the NASDAQ Composite needed today Give me a moment here. See if I can figure that out. The NASDAQ needed 856 net declining issues. We don't have that inside the NASDAQ composite, out of about, 3,200, something like that, issues traded in the composite. So the NASDAQ composite is still very strong. It's strong like bull. It is in still bullish mode out here. Price the advanced decline oscillator is above zero. So everything there looks good. We're going to see some divergence out here. And that's why we want to take a look at it. I don't know, what area of the market you might be trading, what you're looking at, but, that's what we want to be. That's why we're going to kind of piecemeal this together to figure out what's going on. Now, what I'm going to do here is let's go to the NDX 100, then we'll go to the NQ. So let's do this. Let's go ahead and put the NDX 100, see if we have a same message, different message. I don't know what message we're going to have. I know that the NDX needed only about 45 issues, net declining issues, in order to turn its advanced decline oscillator down below zero. It too has a rising price oscillator. So the NDX 100 is still very bullish out here. 4614.47 would be the number. Somebody might say, well, what is it in the Qs, Steve? Okay, I'll give you the number in the Qs out here. Let's go do that. And the actual number inside the Qs is 112.38. So if you were long the Qs and you're seeing the market pull back here, you don't have a message to go ahead and exit your position. You certainly do not have the message to go ahead and go short the QQQ series ETF. That doesn't mean that it didn't top. I'm just telling you that the tools that we use and the message behind the markets here inside of the Qs, inside the composite, inside the NDX 100, it's saying no, not so fast, not now, not just yet is the message here. Again, we'll see a divergence inside the market. So let's do this. Let's go take a look at the equity futures contract, because here we've got better price discovery, right? So let's go take a look at it. I'll put up the current contract. Just give me a moment to find the symbol. There we go. We're good. Let's go see what it says. And it too, it's got a long way to go. I won't say a long way. It's got, 40 points or so to go to the downside. The number here is 4606.05. So no message inside of the NQ contract. Now what that says is, hey, okay, the daily charts are going to take, they're going to be the last to turn, right? The weekly would be the last to turn, or the monthly. But in our case, for what you and I are looking at, the weekly would be the last to turn. What do the intraday charts here inside of the NQ communicate to you and I? That's how we're going to take a look here at the 30-minute chart, see if there's any pattern out here. Is there a pattern out here that shows up? Well, I see an A to B equals CD to the downside. I don't see price moving lower with less relative energy. I don't see that signal out here. And I don't believe we've completed an A to B equals CD to the downside, but I don't know. Let's go measure it. Let's go let our A to B equals CD calculate it. It has not completed. The 1-to-1 A to B equals CD to downside would be 4638.25. So what does that mean? It means we still might have some movement to the downside. I can see we've got a TAS market profile that looks to be holding as support on the 30-minute chart, but I wouldn't be surprised to see price inside the NQ move down to 4638. I don't believe that still turns the daily chart to bearish territory. It doesn't. 4605.90 was that number out here. So the question becomes, what happens as price hits that 4638 area? Could be another Gartley buy pattern is the setup as we speak right now. So stay tuned. We'll go take a look at some of the other indices because we want to get a feel out here. I think we have some that may have said that a turn has taken place as a 114, but this is important to look at the end of the day. And I hate when people say at the end of the day, but these indicators require us to do so. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 104. S&P is off 11. So we're taking a look at trying to piece this together. What we looked at in the first segment is we said, hey, if you believe that the market has turned, the places that you do not want to go short right now because you don't have any signal as such is in the NQ, is in the NDX 100, NASDAQ composite, obviously, although there's not an ETF that you can sell for the entire composite. Not one that I know of, at least. Maybe there is. But that would, those have not given you a signal. Now, I have a question here from Tucker, if I would take a look at the VIX possibility. So if we take a look at the VIX chart, same set of tools, only I'm going to add one more thing to it, or I have added one more thing to it. We saw that the VIX index back here in the trading session of June 27th, it was moving higher, doing with less relative energy out there. Then we saw price move lower. As soon as price here on the trading session of June 28th fell back below the red line out here, that's when the price oscillator started turning to the downside. That is the bottom portion of my screen. But you see, I can do the same thing by eliminating that and just looking at the red line on the chart. See, with the red line, I know which side of the trade it says to be on or which side of the trade to not be on. And that is a helpful tool out here. Now, you want to use some additional tools as well, but that's one of the first places I look and say, hey, what is price doing? What is price doing in relation, in relation to its two exponential moving averages out here? And in this case, on the 28th, if you had been long volatility, you would have said that was time to get out. You may have decided that you wanted to go ahead to the short side out there. In this case, what we see here is back here a couple days ago, July 20th, we had a nice little hammer candle that formed inside. Oops, I guess I can't do it that way. Inside of, I can do it this way though, inside of the VIX index. That's at the top portion of my screen. Nice little hammer candle that says that that bottom is pretty important. That price point, by the way, just so you know, is 1140. 1140 is the number. Now today, see how the candle session is trading above 1297. So what does that say? That says that the price oscillator is turned up. That says that for all intents and purposes, the VIX ought to trade higher as long as it stays above 1297 at the end of the day. If it doesn't, you will have had a test of resistance and a failure out here. I don't know how the market is going to end. I know what you should need to be looking for out here. And if, in fact, the VIX closes above 1297, it says, so here's its message, a little different than the Qs out here. It says more likely than not price would make a run for 1520. That's the black line on the chart. That happens to be the 50-day exponential moving average. So those are the numbers that you want to pay attention to. Now, let's go switch over since the VIX index is really tracking the volatility of the S&P 500. Let's go see what the message of the S&P 500 is. Is it trading below its price oscillator or its oscillator unchanged line? That's the red line on my screen. And if so, then it is confirming the message inside the VIX. Well, it's testing that level as we speak right now. You can see you've got the S&P price at 2164.17. The actual number, the line, Stevie's red line, is 2163.36, 2163.36. If the S&P 500 closes above 2163.36 today, all we will have had is a test of that oscillator and change line. That means that the oscillator, the price oscillator at the bottom, is still moving higher. You will not have had a signal. So a little bit of a divergence. There's one of the divergences out here between what the VIX index is showing and what the S&P is showing out here. So, and again, the VIX could just simply be moving sideways here, chugging around for a period of days, right? When the VIX index is below the 50-day exponential moving average, you forget about all these people that tell you there is no, what do they like to say? There's complacency in the market. I try to trade that. What it says is that what the VIX index does, those people that say that, I always like to say, really? Hold on a minute here. In fact, here, I'll just, I should be able to do this here. Let me come in here and put, let's go back like about 10,000 days. There we go. Apply this, and hopefully it doesn't crash the system here. It won't. I know that. Let's just do this. Let's go back into 2007, 2009, something like that. Let me see where we get a nice high VIX. Oh, I'm not the VIX. I've got to go over to the VIX index. Jeez. I'm going to try to do something for you, and it's not even going to make any sense unless I actually get all the tools together here. So let's do this. Come on, work. There we go. So now it's got all this data. See how far back we can go, how quickly. Oh, we don't want that data. Why? There we go. Okay, so now we've got some bars. Let's see where we're at. We're in 2004. Yeah, I'd say we got back to 2007. Let me fast forward a bit here. Okay. There we go, November 2007. So here's the VIX index. And the 50-day, I'm going to go actually to where the market, I think, made a bottom, right? I know that, not where, I know where it made a bottom, right, in 2009. Here we're in 2008. Sorry about this, just a lot of data that it's churning. So I just want to show you something out here for all those people. So that way, next time you see somebody say that, you can shoot them through your television screen out here. So the black line on this chart, let's not worry about Stevie's red line out here. The black line on this chart is the 50-day exponential moving average, okay? And when price trades below it, the market does one of two things. Only, well, I won't say only, does one of two things, basically. It moves higher or it moves sideways. That is, unless it has formed a bottom out here. And that's utilizing a whole different set of tools. But if you take a look at right here, back on March 11, 2009, you've got the VIX priced out at closed at 43.61. But where is it in relation to the 50-day exponential moving average? Take a look at when the market, I don't show the S&P 500, but take a look at where the VIX trades, okay? Now, would those people have said, God, there's certainly what's the opposite of complacency out here? I'm not really sure, because then they likely would have said the VIX is high, and that's telling you that the market is going to croak or crash or something like that. That's how insane the thinking is. Every time I see somebody on CNBC, and I saw it again this morning, and I just wanted to put my arm around that person and give him a hug and say, don't do that. Don't say that. You're not doing yourself any justice out here. Pay attention to where the VIX is trading in relation to the 50-day exponential moving average. Do not pay attention to whether it's at 50 or 20 or 10 or 12 or something like that, because you won't be able to trade with it. You won't be able to use it as a barometer out here. And I want you to use it as a barometer for what the market might do. Okay, so enough of that soapbox out here. So we took a look at the S&P 500. Let's go take a look at the Dow. Right, so the S&P 500 has not given us the turn message just yet. And if the prices closes below those levels, then it has. It has at least said that there's further retracement in the air out here, or there should be further retracement in the air out here. If we go take a look at the Dow Jones Industrials. That'll pop up on our screen here in a second. I really want to get rid of that 50-day because I don't give a hoot about it other than really with regard to the VIX index out here. Okay, so we're good there. That's good. That's gone. Now, in the case of the Dow, we can see that oscillator and change line is being tested. The number is 18,486.86. And you're at 18,475.90. So if you were going to go short a market, would it be the S&P 500 now? The answer is no. Would it be the NDX 100 buy the Qs? The answer is no. Would it be the Dow? Well, then the answer could be yeah. Because you'd want to go at least with something, in this case here, where the price oscillator, see, if you look at the bottom portion of the screen, I can't tell if the price oscillator is turned down or not today. That's why we use the red line, because in an instant, I can see what's going on, and I don't need to clutter my screen with that out there. But so the Dow Jones, and in fact, we've got a similar message with regard to its advanced decline oscillator reading. You'll see that when we switch over here, and you'll see that it is firmly below the zero level, reading at minus 1.12. So if you were going to take the short, right now the weakest of the indices that we looked at is the Dow. When we get back to the break, let's just go look at the Russell 2000 or anything else that you'd like, but you got to give me a call, 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Now, before we went to that break, we were taking a look at different industry indices, trying to get a message here. Now, I said what we identified was that the Dow was the only one that was giving us a signal. Remember, before that segment, I said this is end of day readings that are going to be the most important. So what we would want to do is we would want to slide over to some intraday chart to see if there's any kind of message there. Are we getting a confirming signal? So that being said, and utilizing the Dow, we would go take a look at the Dow 30-minute chart out here, right? So we're going from a daily to a 30-minute chart out here, and voila! If we take a look at completed patterns out here, this is a 30-minute chart. It started with this little doji out here at about 9:30 in the evening. That was on when was that? Was that last night? July 24th, it was. So from that little doji candle, doji shooting star, if we start doing our wave count to the downside, well, guess what happened at 12:30? Actually confirmed here at 1 o'clock as we came on the air. You got wave number 7, right? That 7th inning, take me out to the ballpark. And in fact, that's what you got. Now, we have to be aware at those 7th inning stretch sessions out here, that is oftentimes where a market can turn. Then it can be a fairly significant turn out here. Well, it was also the completion of an A to B equals CD to the downside on the 30-minute basis. And it was confirmed with a nice little bullish reversal signal, a bull sash, a bullish engulfing candle in this case here. And so now the real question on a 30-minute basis is going to be that 18,415 level. That also happens to be that price oscillator unchanged level. So if price can, and we at just above 18,414, you've got 18,418, what happens to be the TAS market profile. So that's the level of resistance. If the market is going to turn and bounce, you'll see price move above that. If not, you'll see price bounce into that level and then continue to move lower out here. So the Dow is saying, well, now would not be the time, because you've got these potential reversal signals that are in place on the 30-minute time frame. Again, end of day, when we're taking a look at the daily indices out here, we looked at the Dow. Let's go ahead and take a look at the Russell 2000, right? Let's go kind of round this out for the most part. So if we look at the Russell 2000, let's wait to see its population. Well, the Russell 2000, which normally, if you're going to take a look at a market that's going to move higher or lower to the downside, what you really want to see is you want to see the NASDAQ composite, the NDX, the Russell 2000 be the guys that are out in the lead, right? You're worried about the 30 stocks, but you're not necessarily so worried that you're going to be blinded by not paying attention to the general market out here. And so in the case of the Russell 2000, you're not getting that signal at all. And not at all. The number, by the way, in case you're not watching us on Tiger TV, is 1205.60. That's the number that you need to see the Russell 2000 close below in order to give you that signal that, hey, a retracement may be underway, likely would be underway. But you don't have that as we speak right now. So that's how I would piece together the market. So the only signal that we have with any kind of confirmation, there's really two, right? You get the VIX index that says its its price oscillator has now started to rise, but end of day, I gave you the number on that you want to pay attention to. And you've got the Dow that's saying, maybe so to the downside, but you've got a bullish reversal pattern on the 30-minute chart out here. Let's just take a look at the overall U.S. stock market, right? The Wilshire 5000. Let's go see what that is saying. That is not giving you any kind of a turn message out here. That would take place if we saw a close below 22,402.28. That level has not even been tested. The low so far today looks like it is at 22,413, and the number you're paying attention to is 22,402.28 out here. So the health inside the market looks pretty good. Inside the ES Mini, let me just go take a look at the 30-minute chart there for you as well. Let's go take a look at its pattern that is present at the moment. It also completed an A to B equals CD to the downside while it was testing this hammer candle right here. This is a hammer candle from 2:30 in the afternoon on January 21st, and the low there is 21.53. I would be paying attention to that level. It might have been 21.53 and 2 ticks 50 cents out there, but I would be paying attention to that level. But you can see the A to B equals CD to the downside. Went ahead and confirmed there's this nice little bullish engulfing candle, a little bit follow through to the upside. The key numbers to be watching here, both a 30-minute TAS profile as as well as Stevie's red line, both lined up at the 2161 level is what we'll call it. If we see price close above that, you could anticipate or should expect to see further retracement. If that level holds as resistance, well, then that is resistance out there. Does that mean you'd sell it? No, you got to really wait for the daily charts to give you that kind of signal. And inside the ES Mini, just to go ahead and round this out and finish it off, let's go ahead and do this here. Let's go ahead and take a look at the ES Mini. It'll give me just a moment here to get down there. I'll give you that number, and then we'll have put it all together for you. We'll just have the next 25 minutes to party or something along those lines. But that's a good thing to do on a Monday. Come on, load for us. Load for us. We're on live TV, live radio. Okay, so you can see that in the ES Mini, that red line, Stevie's red line was tested. That's your support or resistance level, right? The number happens to be 2156.37. The low today, 2155.75 out there, right as it was making that A to B equals CD to the downside. So you got the S&P 500 that says no, not yet. The ES Mini that says no, not yet. Well, what does that mean? That means that all price is really doing is testing a level of support today. When support fails, it's a whole different message. When it just gets tested, it's just being tested. And that's it. Okay, so got another message in the den here. Mike K says, SR, can you give us your current view on gold and the silver market if you haven't done so? I have not. But if we go take a look at, just use the same tool out here. Let's go see what the message of the markets are, not my message, but what the charts are communicating to you and I. And if we take a look at the gold contract, as soon as this populates, apparently my system, all those wheels are spinning, and it's taken a little bit longer than I would like to see it doing. In the case of gold, we'll do the same thing here for you, Mike. We'll take a look at the daily chart when it populates. Then we'll go look at an intraday chart here. And so the key level inside of gold happens to be 1342. That is the level that price needs to get above in order for gold to really say that it wants to go back and test its highs and or move higher out there. Now, today you're seeing the likes of a potential, I do say potential hammer candle. It just depends on what the closing candle session looks like. 1510 is a really key level of support, which gold continues to hold. So we're kind of in this little holding pattern out here. But at this stage, the price oscillator, you can see how it's turned down, right? You can see the bottom panel of my screen. It's turned down. What's that message? That message is that price wants to move lower. I would change that view, or gold would go ahead and change that view if it can get above Stevie's red line. Now that number is going to be a little bit different, by the time that occurs. But right now, 1342.10 is the number. And that's what the daily chart shows. That's the same thing in silver. But if you take a look at gold, what was gold doing intraday? Well, it was moved beyond a nice little seventh wave out here, where it had just simply bounced and moved sideways. Let's get rid of those counts. But what it was doing as it moved lower was it did put in a nice 30-minute bottoming pattern, right? Price is moving lower, doing with less relative energy, forms a nice little hammer candle down there, a nice little bullish engulfing, and no wonder it has bounced out here. And it's bounced, and it's above its current 30-minute market profile. It's got some resistance out here. That resistance, let's go take a look at it. A little shooting star candle that came into play, and that was right here at the time period of 12:30. So about a half an hour ago. That says that high, 1321.90, is important. You move above that, it's got more move to the upside. But not until it takes out that daily reading does the message change back to anything but bearish. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 99. S&P is off 9 points. Just to follow up a little chat in the Tigers Den one about Delta Airlines out here. So, Dano, here's what I want you to focus on inside of ticker symbol there, DAL, with regard to your trade. What you're looking for here, so it has a nice little rising price oscillator as we speak right now. It's still below zero, so it could be nothing more than a nice little counter trend rally. But we did see price move above that oscillator reading, really began moving above it on July 1st. He had a final confirmation there on July the 8th. And the level to be watching for is 38.34. You want to see a close below 38.34 to start turning that price oscillator down. There's nothing more bearish than a price oscillator that's falling below zero, nothing more bullish than a price oscillator that's rising above zero. They're not going to give you your early indicators on being able to get into a trade. In that case, you want to use A to B equals CD patterns. You want to use price relative strength divergent patterns, wave counts, any number of tools out there is better leading indicator patterns. But with regard to when you are in the trade, you're managing, you're trying to understand, hey, what is price doing? Whose hands are the markets really in at this stage here? The number you want to be looking for as we speak today is 38.34, and that is inside of Delta Airlines. DAL is the ticker symbol. Okie dokie. Now, we've taken a look at gold. We've taken a look at the markets pretty well, right? I think we've thoroughly covered those. We've taken a look at the VIX index. I don't know what it is we want to take a look at next. I guess at this stage here, at quarter two, we should just take a look at some of the individual stocks. Let's take a look at Tesla. Let's go see what it is doing. We'll take a look at a number of different tools out here. First, as we take a look at Tesla, let's go take a look at what price is doing in relation to its market profile. So right now today, we know that Tesla is trading above the TAS daily profile, which is at 227.50 out here, 227.50, but it's got resistance at the bottom of its weekly, which is 260.215, and that's what I see going on in Tesla out here as we speak right now. The swing point that you'd want to be focused on perhaps is June the 8th, volume there, 5.9 million shares. Today you're up with 3 million shares, so pretty decent volume, but it looks like what Tesla will do is try to tackle that 233.37 level out here. Hey, let's go out to Rich in Oregon. Rich, help me pronounce your state's name, would you?
Oregon.
Oregon. Thank you very much. Hey, are you a native of Oregon?
Yes. Born and raised.
Perfect. Great, great. And so how's your summer out there? What's the weather?
Fantastic.
So you guys aren't affected by like the wildfires that they're having in California? You guys are nice and wet and you're good?
Not at this time. We've had enough of moderated temperatures that have kept the wildfires down. Nothing like California.
Does Oregon have a wildfire situation
Yeah.
or problem? It does.
Especially in the central part of the state. It's pretty arid and dry, so they do get some really bad forest fires up there.
Yeah, the ones that I saw on television this morning looked pretty bad out there. So fire's a nasty thing. But you wanted to take a look at Ford Motor Corporation. Tell us what you're doing, how I can help you.
Well, I was looking at considering perhaps buying it here. So I was wondering what your TAS profile was indicating at this time. I know Ford's not a Tesla, so you're not going to get these big bumps, but
Sure. Well, let's go ahead and try to answer that question. So the first thing that I notice, Rich, when I take a look at the stock chart is the April 28th candle session, which had nice volume up at the high. The price level, the price range on that trading session was 1371 to 1422. Now, that was an earnings release date, so they must have beat numbers. Everyone liked it. And then they changed their mind the very next day because that's the high out there. So that swing point, and the problem is that price went from, let's say, a high of 1422 all the way down to a low in June 27th, going along the old Brexit type stuff. And it got down to 1216. And a lot of people that might have bought it on the April 28th level kind of maybe said, geez, that didn't work out so well. And if my price gets back up here, I might just want to take my money out. And price is back up in that range right now. And you got up there on July 21st with 40 million shares. But remember, that 40 is going against 87. So you have half the enthusiasm now in July 22nd, 25 million shares, so even less than half on that trading session. So with regard to our TAS market profiles, here's what they say. They say that price is more likely than not going to at least pull back to 1348. It's trading right now at 1378. That's not a lot in relation to pennies. Is this a longer term, intermediate term type trade for you? What's your time frame horizon?
Well, in today's volatility, this is a short-term trade.
Okay, so then short term, you want to at least wait to see if price on a pullback can hold 1348, or you want to see price go ahead and break above that high from April 28th, which was 1422, preferably with some volume out there, but at least a breakout. You'd see a close above that level. You'd see a close above that level, come back and test 1422, reject it, and continue to move higher out here. But that's really kind of your holdout area. On a deeper pullback, let's say that the market has a nice little pullback here for a week or two. We have initial signals, but no real signal just yet. Then the price point I would be looking at would be about the 1268 level to anywhere down to the low from June 27th. But I'd say that 1268 would be the first place that I would look. If I put a weekly chart up on my screen right now, we change that. We don't have to look at the market profiles. But if we just go back to that same week, just to take a look at the volume metrics, that week that began on April 25th had volume of 239 million shares. And last week you were into it with 137. It's just saying to me that there's just not enough energy just yet to bust it out. So I think your best bet is to wait for some type of retracement. Now, Ford on a daily basis, since I've been using that oscillator and change line, here's what this says to us. This says that the price point of 1356 is the number that you'd be paying attention to. And if you were to see it close below 1356, you're more likely than not to see further pullback in the market. Probably best to try to time this with the markets and what they want to do in the S&P 500. So that's what I see right now at 1:50 in the afternoon. What questions does that pose for you? Or what additional information would you like?
Well, the reason I hesitated even buying today was what I saw happen in the VIX with its kind of spike this morning, and the way that the VIX is actually holding. That made me hesitate on buying anything.
And so neutral is a position, and is a good position, and is very valid based on what you are looking at with regard to the VIX. Because what we know about the VIX, we know a couple of things. One, the way that it's trading today is above a level that's really important for it to close above, which is 1297. If it does that, price oscillator has begun to rise. That would give you your second signal that the VIX wants to trade higher to at least its 50-day exponential moving average. That should put some pressure inside at least the S&P 500. You'd say inside the markets, but inside the S&P 500. I see we're going to break here. You're welcome to hold if you want, but you don't have to. Yeah, okay. All right, so we're going to go back out to Oregon. We'll speak to Rich when we get back from this break. We'll finish off our thoughts on the VIX index, and we'd love to hear from you as well. You got the Dow trading down 101, S&P's off 10. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Back back, folks. We're on the line with Rich in Oregon. We're taking a look at the VIX index. And, Rich, in case you didn't catch the one of the first or second segment out here, you've got the current spot VIX index trading at 1352, and the furthest out futures contract is trading at 2045. So that is too wide of a range, and that's got to be narrowed. So to see the movement that we're seeing in the volatility index makes sense to me. We've got to see that adjustment come in. So that's one thing. We know that there is a correlation with regard to light sweet crude and the market. You've got light sweet crude right now that is trading off $1.05, 43.14. We know that that is putting pressure, or should be putting at least directional pressure on the S&P 500. The light sweet crude is below all market profiles, so it really suggests that we ought to see another $3 pullback inside of light sweet crude. That's the 0.618 retracement level. That would be at about 40.44 out here. The question becomes, are we really seeing a market turn? The VIX index itself, as long as it can close above 1296, then what it ought to do is it ought to make a further run higher. And the level that I would be looking for inside of the VIX index is the 50-day exponential moving average, which right now is priced at 1519. So, those are the elements that we should expect. The market doesn't have to totally crater here. It can just kind of chop around and move sideways as the VIX index gets in line with its futures contracts, whichever side decides to do that, and while it makes its way up to the 50-day exponential moving average of around 1519. So that's my take on what the market is doing. It's why we're seeing more pressure perhaps in the S&P 500 than we are inside the NASDAQ composite or the NDX or the Wilshire 5000 and things of that sort. So that's kind of my take. But I think you're with regard to Ford, I think you're best off waiting right now if we come all the way back full circle to the initial question of the call. So what questions have I now posed for you?
Well, you put it in more perspective, because I was trying not to practice what Wall Street has come up with, that FOMO, fear of missing out.
Ah, got it. Okay.
And so I just didn't want to jump in, especially when you started mentioning the signal of the VIX and also the action of the Dow today. I was ready to practice the FOMO just because Apple's going to report this week, Facebook, the darlings, the FANGs.
Sure.
And I felt that was going to push up the indices. And therefore, I was going to practice, FOMO. Because of those.
Yeah, I hear you. The market has been really, it's been moving slightly higher and it's been moving sideways out here. I don't have a clear signal right now as to what the market really wants to do. The signals that I do have say don't short it just yet. But that's as of 1:57 in the afternoon. That could easily change by 4 p.m.
Sure.
But right now the signals are, we don't have conviction, or there's no way that I can conclude that the markets have given us some definite topping signals. All I see are some tests of support. And now both you and I, we've got to wait to see what the end of day action is out there. Doesn't mean there's not a top that's in. But if there is, then you will not have missed out on that FOMO because you will not have bought Ford. So I'd stay patient and I'd wait at this moment.
Well, I've read that cash is now considered an investment.
It is. It is, especially considering if you're in Europe, it costs you to hold that cash. So in the U.S., it's definitely investment. My friend, we're out of time.
Okay,
thanks so much for calling. That was Rich in Oregon. Folks, stay tuned because our man David White, our polar bear, he's going to be up next. Have a magnificent, marvelous Monday. Stay tuned for David and as well the Tom O'Brien Show from 3 to 5. Have a terrific day. We'll see you on Terrific Tuesday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.